Hi everyone, Fred Sloan from FCE Group, and today I want to talk to you about life insurance. I want to talk about how life insurance products are sold and how they can be useful, but how they can also be problematic for investors. And I want to help give you some ideas on how to think about insurance that you may be offered to understand what may be valuable and what may not be. Um, Life insurance is heavily sold. And by that I mean people who sell life insurance for a living tend to earn very high commissions from the sale of the life insurance. So as a result, you have to look carefully at what it is you're being offered. Um, in addition, life insurance can be very complicated. Something that's called a life insurance policy may consist actually of some pure life insurance plus an investment strategy or an investment pool or an investment portfolio. That is something that's offered to you as one decision that you can make, but it's really two different decisions. And you have to understand what those two decisions are, and you have to make your analysis and decide accordingly. A third thing to think about is that when you enter into a life insurance contract, um, it may be a long time before you can get your money out. Well, to get your really all of your money out, you have to die. And that may be a worthwhile bet for you to make because it may be cheap enough and it may be sensible for you to kind of wait it out and have that money provided to your heirs when you pass away. But if you're also investing in a life insurance policy, well, your money may be tied up for longer than you would like. And it's not always clear at the beginning how long it would take to kind of break even and if there are any penalties to take your money out. So stepping back, life insurance, pure life insurance, is an assessment or a bet on how long you may live and a decision on your part as to the protection you want to give your family in case you die. For someone who is in their earning years and who is supporting a family, has dependents, and who may not have a large net worth saved up, it can be very important to have some life insurance because if that person dies, there needs to be money to raise their family. But the good news is that for people that are typically in those earnings years, which for most people are, let's say, between 20 and 50 or 60 years old, pure life insurance can be very inexpensive. That's called term insurance, and it's designed to last for as long as it's needed. How long is it needed? It's probably needed until the kids are out of the house. It's probably needed until you can build up a high enough net worth that your family could be supported in the event you die. But in the meantime, it would be a good idea to consider that life insurance. And by carefully looking at your family's circumstances, you can figure out how much insurance you need to replace the income that will be lost if you died. But the complication is that you may be offered an insurance policy that also includes an investment fund. And that is something that you really have to look carefully and be very skeptical about because the investment fund that's alongside the insurance would be managed by folks that are employees of the life insurance company. They may or may not be great investment managers. The products that policy would be invested in may or may not be suitable for you. And as a matter of fact, the person selling you the life insurance may not even be aware of what all the possibilities are for investing the money and may not be in a position to show you all the comparisons you would need to make an informed decision about that. That life insurance policy that has that side fund would be called something like a whole life or variable life. But anything that is more than just term life does include that side fund. You've got to evaluate that very, very carefully. And remember that the person selling it to you is going to get a high commission if you take that insurance policy. In summary, it's really, really important to understand what it is you're being offered, understand what the compensation is that the person selling it to you is likely to receive if you buy it, and therefore try to figure out if the sale that's being made to you is really in your best interest or is just a product that someone's going to make a lot of money off of. and you should consult with an expert who has your best interest in mind, like an independent financial advisor, to help you sort through whether all that money that you'd have to put into that insurance company and into that policy is really in your best interest. So I hope you find this useful. Please follow us on Twitter and Facebook and LinkedIn, and please visit our website, www.fcegroup.com. Thanks, and have a great day.